Okay, here we're going to discuss some key concepts about how to actually trade. So this is going to be the most important for just the basics of how you're trading, okay? We've already discussed the candlesticks, so there's going to be some extra nuance here about how a lot of people talk about trading, and again, a lot of it's pretty much crap, but you can get some basic ideas so that you can start building your own strategy, basically. All right, so we're looking at this chart again. Some of the major things that people refer to in the industry that you can help you even more if you do want to look for more things is smart money concepts. I trade dumb money concepts. Much simpler. ICT is a really profound sort of guru in the space that a lot of concepts that you can talk about, like FVGs and all this jazz. I'm just going to break down a couple of simple things. We're going to start with supply and demand. Super, super easy one. It's basically the same as support and resistance, another term for it. Essentially, you've got this sort of drop here that we talked about in the last video, a massive loss of liquidity in the market, basically. Liquidity meaning the amount of orders resting were very small in comparison to the market placed order that just ate up all of those orders, okay? So that caused price to jolt down. Now, supply and demand sort of notion says, hey, we've got this area where there was supply before, and on the opposite side, inverse side, you always have an area here where there was demand before. So you basically range trade between the two. And again, you've got kind of these levels too that you can draw as well. And you can kind of determine where price is going to show a resistance. Same thing, support and resistance, supply and demand. I just call them levels personally because they're just a level of interest where there's going to be resting orders. And that's the whole concept is a price moved very, very quickly from this zone immediately down there. And it wasn't able to, a lot of people weren't able to get in on this area, right? And as it comes back, you're going to say, people are going to enter the market and say, hey, this was an area that we shown support or resistance before, right? Support or resistance, and it's probably a really good buy. There's also a lot of resting orders there that still didn't get filled, right? So you're gonna have new entrants into the market in that area, plus old entrants that didn't happen to get filled, right? So as price enters this zone again, you'll probably see a bounce off of it and go up to the next zone and then a bounce down. And we just don't know how exactly those prices are going to react until they actually get to that level, and then you can trade them. So the next thing people talk about a lot is something like market structure or break of structure or, price action based trends. And essentially all that is, something that we talked about somewhat before is you've got these levels that were these supply and demand zones, right? And you break past them. And a lot of times you get these little retests. The price comes back to it and then goes, right? Because that's the break of structure, or a lot of people, I think another term is change of character. And I say that's a gain or a lost level, right? So they passed it with confirmation. So just different terminology people use. So I'm going to say that that's a gain or a continuation into the trend because we already are in an uptrend. So that's continuation in the same trend. Okay. So, these terms, they all seem to overlap. A lot of people kind of just try to make up their own terms. It's all the same shit, really. Don't be dumb, confusing them. Let's just keep it simple, right? So the next thing that's super, super common is liquidity, right? And when people talk about liquidity, what it actually means is how many orders are resting in an area. It's how much volume is sitting there, right? But when people say liquidity, they're referring to things often called these wicks, right? So it's a liquidity hunt, right? They say things like that, or a stop loss hunt, where oftentimes you have kind of these pivot points, right? And price moves down away from them, and now people enter in to their positions. They all try to follow that trend down, and they put a stop loss here, right? And that's where they would get out of their trade. And they would expect something like this. They would want it to go down, and this would be their loss, and this would be their win. Okay, and it enters that zone, and then comes straight back down, and then hits their target or something like that, right? It's really common to see those kind of like double top sort of things, right? Those M shapes, those W shapes, right? So what does that mean? Like M shape like this, right? Or, a W might look like this, right? The other way, right? So you can see how it comes back down, test that same area. And oftentimes that's just a retest of a level, right? But a lot of times, it does kill your trade. It does stop you out because you might put your fail safe here, your stop loss, right? And then it stops you out. So a lot of people refer to those things as liquidity hunts or stop hunts or sweeps. They call them sweeps sometimes too. I call them a failure to gain, right? So this is a failure to gain this level, right? So I don't like, you'll notice a lot of things, I don't like using certain terminologies that make it seem like the market is against us, right? To seem like it's attacking us, like a liquidity hunt or a stop hunt, like it's trying to hurt us. It's an attempt to make a new high with this, and then it got shot down by those sellers, and it failed to make that new high. So that is still very, very important. And generally what's going to happen is when you have those failures or those stop hunts, liquidities, is it's going to actually cause it to come in this other direction, right? So a lot of people's strategies are based off of waiting for these levels, and then they take the reverse direction because they assume that a lot of people just got liquidated on their trades, right? Liquidated meaning that their trades got cut off, right? And they lost money, okay? So people will wait for things like this and then take the trade in the reverse direction just to kind of quickly scalp it, or they'll trend trade or something like that, right? And that's a really decent start for a strategy if you guys do want to start coming up with some strategies. There's another term that people like to use is called order blocks. You know, it's all dumb stuff. Like this might be an order block where it comes back and it retests. Again, it's just more levels that people use. Let's keep it dumb, guys. You know, this is a pivot point or a swing low, or this is a swing high, right? Just different sort of terminologies, right? Where you swing and then you pivot away, right? A lot of different overlapping terminologies. An order block, you know, is a key point where price changes, right? And then changes trend, and then you kind of retest that zone, right? And then continue to the downside before coming back, you know. A lot of this stuff, again, overlap, it's all bullshit. You know, our goal is to make things as simple as possible so that we can simply follow the trend. Because there's two things we want to know. There's two things we want to know. This is what's going to make you a really good trader is, okay, what direction is it going? And where can that direction end, right? So the way that I think is the best for the dummies to trade is, hey, I'm dumb. I'm coming to the market. What direction is it going to go into? And where should I get in and where should I get out, right? And it's as simple as that, right? You don't try to come up with some crazy strategies or anything like this. We keep it super simple. What's going on here? Well, let's look at the chart. Let's just be intuitive. We say, hey, we've got an area here. Let's be dumb about it. You know, that's probably a good area that people are going to buy in again, right? And where's the trend? It's going up, okay? So maybe it's a good idea for us to place some orders in this area, right? And then look for the next level up, right? So because the trend is up, usually it's going to go to another level if we do get a bounce off of that area. So the next level up might be this thing, right? We look at that. We say, hey, that's kind of that supply and demand that we were talking about before. So that might be our target. So we might just say, hey, all I want to do on this trade is wait for the price to come here. I'm going to put the target here, and I'm just going to say, hey, I don't want it to go that far against me, right? And that's decently your core initial concept. You know, you might get stopped out by these sort of liquidity things, or even you can wait for it if you want, right? If you wanted to really watch that reaction off of the zone and then watch to see if it goes. But that's a very, very simple way of starting off.